Today's topic is how to find the top and bottom using divergence. Let us first explain what is divergence. This is the Nifty chart, daily chart. And if you see at this moment, if you compare this swing with this swing, there is a divergence. Divergence can be checked using an indicator, momentum indicator like MACD. And if you compare the histogram at this place, this is the histogram, and at this place this is the histogram. So if you compare the histogram, although the price is making a higher high, but the MACD is not making a higher high, it is making a low. So this means there is a divergence between indicator and price. So whenever this happens, the more probability is that price is going to reverse. And if you a few weeks back, I have posted Nifty analysis, and in which I had said that Nifty there will be a good correction, and from almost 500 levels, almost 1000 point Nifty has corrected. So the analysis, although there were some other points like wave analysis, but if you are a beginner, then just if you see a divergence on the chart, it means a good amount of correction can come. Now, this is at the top, and this is how you find the top. However, if you want to find the bottom, similar concept of bullish divergence is there. And let us see now, this is the bottom of on the daily chart. And if you compare the price with the previous swing, so it is again a sign of bullish divergence, in which although the price is making a lower low here, but the indicator on the MACD, if you compare, it is not making a lower low, it is making a higher low. So there is a divergence on the MACD here. It means that momentum is not strong on the downside. That means price can soon reverse. So this is bullish sign. When an indicator is not making a lower low, the price is making lower low. This is known as bullish divergence, and soon the price reversed. So this is a very simple concept in which using this indicator, momentum indicator, you can this momentum indicator is actually a leading indicator, because before only at this moment indicates that there is a divergence and price can reverse. So this is a leading to price indicator and not lagging indicator. The moving average crossovers are lagging indicator, but the divergence is a leading indicator. So this is always a good indicator to add to your charts. And let us see some other charts and see if divergence indicated a fall. Now let us see the chart of real estate. Now if you see, from this price is falling, and if you compare again from previous swings, there is a clear divergence. Let me mark it. So this is a divergence. Indicator is making a lower high, and price is making a higher high. So from this point, at this moment we know that some fall can come, and indeed it fell. So this is how at at this moment we are analyzing the market, and this is the analysis that price is about to reverse, and this can be at top. Now this is a daily chart. If you are going higher, like monthly chart, weekly chart, then that top can be for some more time. Now let us see at the bottom if this divergence work. Now see again at the bottom, between this swing and this swing, if you compare, this price is going lower, but indicator this is going up. So this is a bullish divergence. So whenever this happens, we are it's the analysis says that price can reverse to the upside, and same happened here. So you can see how simple, using of this simple indicator and simple concept, you can easily trade. Now let us take another index. This was a realty index, and let us see PSU Bank. Now sometimes you will see that without even divergence, stock is falling, but if you, I mean, this is a daily chart. If stock is falling and there is no divergence, then you have to go to, I mean, you change the time interval and try to find whether there is a divergence or not. In this case also there is a divergence. This is a PSU bank divergence, I mean PSU bank chart, and you can see at this moment and previous swing high, you can clearly see that there is a divergence on the MACD. So at this moment we should book the profit, and next we are expecting fall. So it gave the hint here only. And at the bottom, if you see, let us see if there was a bullish divergence. Clearly there is a bullish divergence. Let me zoom it first. So if you see, this is the price going lower, lower high, lower low, and on the MACD you can see there was a higher low. So there is a bullish divergence, and you expected price to go up, and it went up. So till now it is working. The simple analysis of bullish and bearish divergence is working. Now let us see pharma. Let us go to the pharma again. Let us try to find the top, and indeed this is the top. See, this is the top, and between these two swings you can see there is a divergence. So divergence, we assume that price can reverse, and it fell. And at the bottom, if you see this swing and this swing, you can see this is lower price, but indicator making a higher low. So price can go up. But now this with this video, just we can say that divergence is a very effective tool, and with this we can make a analysis. However, there are some other points that needs to be noted down, that along with divergence we have to note there are other factors also, and if you combine them, then this divergence can even give you more good results. So in the coming videos we will discuss about those concepts also. And if this delivers value, please consider subscribing and like this. And if you have any doubts, please post them as comments. Thank you.